right, hello everyone. Welcome to today's webinar, How to Trade Like the Pros. My name is Jerry D'Ambrosio. I am the manager of educational content with VectorVest. I want to thank you guys for joining me here today. I want to thank everybody joining us via YouTube as well. You guys are pretty packed room here today, so we got some good turnout here. I do want to do a quick sound check. Peter says good afternoon, Jerry. So it looks like everybody can hear me okay. Peter says audio is good. You guys can see my screen. Fantastic. All right, before we officially get started, a couple of things I'd like for you guys to do for me first. Number one, grab a pen, a piece of paper, something to drink, of course. I will ask you guys, pen and a piece of paper, of course, is always good to take notes, but I will ask you folks to write a few things down later. So just somebody out there, grab a pen and a piece of paper. And number two, get rid of any distractions. I know this is tough, but what I like to do is just put my cell phone as far away from arm's length as possible. If I'm ever watching a webinar or just trying to concentrate, distractions are really inhibit the last one, right? You're here to learn, you're watching a webinar, you really want to better yourselves as traders. I commend you for that. So to get rid of any distractions is really what's going to help you guys absorb the content here. And some of the things that you're going to learn today, number one, we're going to go through 5 common principles professional traders follow. Okay? I'm going to teach you an extremely easy and effective short-term trading strategy, very easy to understand. By the end of today's webinar, you will know how to trade it. There's not much to it. It's a very, very easy to understand system, very effective. And I do emphasize those short-term because the average holding period is anywhere between 2 to 5 days. Okay? And then finally, how to quickly and easily identify the best trades. What I hope that you guys do is stick with me to the end. We're going to be together for about an hour. So at about 2:50 Eastern time, just somebody remind me. What I want to do is give you a copy of the slides that I'm using here today. So just somebody remind me at the end about 2:50. I sometimes forget. I got so much content to cover that I'd just like for someone to just say, hey, Jerry, just don't forget the slides. And what I'll do is I'll put them in the handout section of your GoToMeeting control panel. It'll be a PDF that you can just open up and download. Okay? Again, my name is Jerry D'Ambrosio. I'm the manager of educational content. This is our education department. It's a fantastic education team. By the way, I do have Ray Clark. Ray is the third gentleman from the left, 2 over from me. He's in the background. Ray is the Vice President of Educational Services. If you have any questions, shoot them in the chat box. Ray will be there to answer. I'll answer questions along the way as well. But our number one focus as an education team is we want to make you guys better traders, better investors, and that's of course through not only the VectorVest software. We want to teach you how to use the program, where to click, what this tool does, what that tool does, but we've really developed and grown as an education team over the years in that we're going to teach you different trading techniques, different investment techniques, order entry. That's something that we never did, 15 years ago when I first started. So we've really grown as an education department, and that's what I'm going to teach you here today, a trading technique. There are elements of, within the VectorVest system that we are going to use as well, okay? So first, let's start off, before we get into the technique, what makes a professional trader a professional trader? They're there for a reason, right? They're the best in the business for a reason. So why? What separates them from, the average retail investor? And this segment here is all about getting you in the right mindset, because this is not your buy and hold retirement approach. This is for the money that you have set aside to swing trade, to trade a little bit more actively. If you're not doing that, maybe you'd want to consider doing that. If you're interested in technical analysis and shorter term trading and chart patterns and things like that, precise setups and entries, as opposed to maybe your retirement account where it's just buy and hold. You're paying much more attention to fundamental valuation and earnings growth rate and sales growth rate and things like that, those fundamental indicators. This, not so much. We're really focusing on technical indicators and chart patterns to help us identify buy and sell signals. So if you're doing that, if you are separating or allocating different portions of your portfolio to different types of trading, great. Okay, just know that this is for your swing trading portfolio, not for your retirement account. All right. Um, Number one, the first thing I think that separates a pro from, the average retail investor, you and I, right, is that they're realistic. They know that there's no magic pill that they're going to take that will make them better traders overnight. Success in this industry or any industry, I don't care if it's finance or construction or athletics. If you've ever asked anybody who has ever gotten to the top of their respective fields, again, construction, finance, CEO of a company, professional athlete, they'll tell you that it took hard work, didn't happen overnight. So, this is one of the things that separates them from us, is that, a lot of times we're going to we want to get rich quick. Everybody's looking for that, that 1,000% gainer that's going to change your lives, right? And you want that to happen overnight. It's not going to happen overnight. It's going to take many, many years of plotting and learning these different types of techniques, but it's going to come with some effort. Next is that they control their emotions. They don't allow losing trades to affect them. I know this is easier said than implemented and done, but pros don't think of the money first. They focus on doing the right things, making the right trades. They know if they do that, the money will follow. The money will come. And one of the reasons they feel this way is because they place trades based on facts and data rather than a gut feeling. And we've all been there. Earlier on in my career, I've been with VectorVest now 16 years, and I used to buy stocks just for sometimes no apparent reason other than that I thought it was going to go up. I had that feeling. Pros don't think that way. They look solely at all of the information in front of them to make their decisions. They're prepared. They know exactly when they're going to get out of a trade even before getting in. Can you say that? Truly ask yourself, with every trade that you place, do you know exactly when you're going to get out, whether it be at a loss or at a gain, before you get into the trade or as you're getting into the trade? We never want to make decisions along the way after we've been in a trade for a while. Swing trades are so precise and the holding periods are shorter. You have to know going in exactly when you're going to get in and when you're going to get out. Now, the question becomes, all right, well, when do I get in and when do I get out? Right? There are different types of trading techniques that either pros have created or just industry standard swing trading techniques that have already baked into the pattern or the setup, stop criteria, exit criteria, and profit objectives. Okay, so the reason why a professional trader is using a technique and a certain combination of entry, exit, stop loss, profit target is because they've examined and tested so many different techniques and combinations that they figured out which one is best. Lastly, most importantly, I think professional traders are disciplined. They stay sharp and focused when things are going well. That's easy, right? Things are going well. What we don't want to do is just get kind of giddy and over enthusiastic. You want to stay sharp, focused, stick to the plan, but they're resilient when things aren't going so well. They don't put their heads down. They don't get frustrated. Remember the emotional slide earlier? They learn to control their emotions. They have a plan and they stick to that plan. Now, what happens if you're someone that is struggling with some of these things, whether it be allowing emotions to determine decision on which stocks to buy or sell, not having a plan, not sticking to a plan? If you continue to struggle with some of these things, what's going to happen? You're going to go broke. You're not going to be playing this game too much longer because losses will just keep building up, and you'll wind up broke with no more money to invest. If you start doing things the right way, adopting some of these characteristics that separates pros from retail traders, you'll know what you're doing. You'll know exactly what you're doing no matter the situation. So your confidence will increase, obviously. And once you start to develop better habits, you'll start to see more consistent gains. So we have to turn that corner in developing better habits when it comes to trading. There is a big mistake, though, that traders make when first starting to implement a short-term trading system. They follow unproven, complicated strategies. They feel like they need to use 5 different technical analysis indicators and, I don't know, 3 different types of moving averages to help identify entries and exits. For some reason, I never could understand this. New traders who are just starting out trading this way, maybe you're out there. You find value in complexity. The more indicators, the better. That's what you're thinking, right? Sometimes, and a lot of times, that's going to lead to frustration, confusion. One indicator is giving you one signal, another indicator is giving you another signal. Multiple indicators can be giving you the same signal. It becomes redundant and or conflicting, just depending on how many indicators you decide to use. What I want to show you today is what's called the RSI-2 trading system. Right, Bob says analysis paralysis. Too many indicators, you're never gonna make a decision, or when you do make a decision, you're not comfortable in it because you want to be so sure of the trade setup that there's no question on whether you should take it or not. And if there is, you're just following a complicated strategy. Okay, the system I want to show you here today is called the RSI-2 trading system. It was developed by Larry Connors. You may have heard of him. Very famous author and trader who has over 30 years in a financial markets industry. This strategy, the RSI-2 trading strategy, focuses on stocks in long-term uptrends but are experiencing short-term corrections. All right, that's pretty vague, right? What I love about this system is that it's so simple. It only uses 3 indicators. Okay, not 5, not 7, not 4 different types of moving averages. It uses only 3 indicators total. The 200-day simple moving average to determine the long-term trend, and the 5-day simple moving average, and a 2-period relative strength index for the short-term correction. Okay, let's take a look at what this looks like on a chart. Here's Procter & Gamble, okay, from November of 2018 to November of 2019. Do not worry about why I went back so far. I'll explain that in a moment. But let's learn how to recognize the technique and really what this setup is all about. So during this time period, you could see that the price of the stock is above the 200-day moving average the entire time. That's the prerequisite for this system. The stock's price has to be above the 200-day moving average. The stock has to be in a long-term uptrend, and this is how Larry Connors defined long-term uptrend. Price being above the 200-day moving average. Does that not mean that price is in a long-term uptrend if it's above the 150-day moving average, right? Which is a long-term moving average. That's not the case. It is in the long-term uptrend, but he's using this particular 200-day moving average in determining whether the stock is in a long-term uptrend. Okay, so overall price goes from bottom left to upper right. Price stays above the 200-day moving average, but from time to time falls below the 5-day simple moving average. That's the white line hugging price, 5-day simple moving average. Okay, long-term uptrend, short-term correction. And again, that is defined by price being below the 5-day moving average. Now there's another indicator, right? It's called the RSI-2 trading system. So there's a third indicator. It's the relative strength index. Relative strength index is on a 0 to 100 scale, where the industry standard look-back period is 14. So we're looking at a daily price chart here. We're not looking at intraday. We're not looking at weekly. It's a daily price chart. So the industry standard is a 14-day, which we're looking at here. That's the RSI down at the bottom, 14-day look-back period with the lower extreme level of 30 and the upper extreme level at 70. Below 30 is considered oversold. Above 70 is considered overbought. Now I had to open this graph up a little bit. Remember the graph earlier we were looking at from November of 18 to November of 19. Notice the 14-day RSI, the industry standard RSI, never dipped below its oversold level of 30 at all. I had to go back a little further to find the one time that the 14-period RSI dipped below 30. Good buying opportunity, don't get me wrong, but that's not what Larry Connors did and how he applied the indicator. What he did was he sped up the indicator and changed the look back period from a 14-day look back period to a 2-day look back period. Okay? He also lowered the extreme oversold level from 30 to 10. You might be asking, why a 2-day RSI and why an extreme oversold level at 10 and why a 200-day moving average, right? Fair question. The answer, and I don't claim to be in his head or really understanding anything other than my guess is that this combination here worked the best. It back tested the best. It traded the best in the real market during his research period, right? He wouldn't have used it. He would have used a 4-period RSI if that worked better. So he landed on this combination: 2-period RSI with a lower level of 10 and a 200-day moving average, and that is your setup. That is your trading system. So here's the setup. Along with the price of the stock above the 200-day moving average, but below the 5-day moving average, and not or, and the 2-period RSI below 10. There's your trade. There's your setup. Long-term uptrend, short-term correction. All right, we're going to look at a lot more chart examples in a moment, but let's take a look at what this trading plan looks like on paper, written down. Here are the entry rules, and I went over this already. We are going to buy only when the stock is above the 200-day simple moving average and below the 5-day simple moving average, with the 2-period RSI below 10, and we are going to enter near the close of that day, whenever that day is. Okay, and we're going to put market orders in, and you were going to trade it as close to the close as possible. When I trade this, I don't mess around with limit orders. There's a chance when you use a limit order that you might not get filled. Liquidity is quite substantial later on in the session, especially within the last 15 minutes or so. So it's not a problem of not an issue of too much slippage and or not getting into a trade. If you just put a market order in at 355, 356, 357, that's the order that I'll place when I trade this system. Okay. Here's the exit criteria. We're going to exit when price goes above the 5-day simple moving average, and we are also going to exit near the close of that day, whenever that day is. So remember, we're buying when it's below the 5-day moving average. We are exiting when it goes above the 5-day moving average and about to close above the 5-day simple moving average, and we will exit near the close of that day. So now we're looking at some chart examples here. Same stock, Procter & Gamble, July 23rd of 2019. Again, I'll explain why I went back that far in a little bit. But on July 23rd, 2019, we have an RSI2 setup. Remember when we were looking at the long-term chart of Procter & Gamble, we saw that the price of the stock was above that purple line. It was above the 200-day moving average the entire time. You're zoomed out at that point, so you can see that purple line. You can see the 200-day moving average. It's far below price. When you zoom in, we lose it. We can't see it anymore, right? We don't see that purple line. But just know, as I go through the examples here, that every example I show you, price is above the 200-day moving average. So on July 23rd, 2019, price is above the 200-day moving average, but below the 5-day moving average and the 2-period RSI below 10. How do I know price closed below the 5-day moving average on July 23rd of 2019? Well, it's a filled candle. It's a solid candle, which means the open was at the top of the body and the close was at the bottom of the body. So yes, price did open above the 5-day moving average, but closed below it, along with the 2-period RSI being below 10. We, on that day, have a setup. Okay? Now, I don't know what the price of Procter & Gamble was on July 23rd of 2019 at 3:55 p.m. Eastern Time, or a few minutes later. I don't have that data. What data I do have is the closing price on that day. So that is the price that we are going to use here in the examples. Okay, so if we buy at roughly 113.85, that, again, give or take a few cents, when do we sell? We sell 1, 2, 3 days later at $114.73. price on that day opened below the 5-day moving average but closed above it, and we are going to exit. We would exit near the close of that session. We don't exit just as price rises above that 5-day moving average. We wait for the close. So your entries and exits are near the close of a session. You're not trading at 9:30 in the morning or 9:45 in the morning or 10 o'clock or any other time other than the last 5 or 10 minutes of a trading session, whether it be buying the stock or selling it. Earlier, I asked you guys to take out a pen and a piece of paper. What I'd like someone to do for me, if not all of you, do that. Take out a pen and a piece of paper and create 2 columns. Create a win column and a loss column. We're going to go through winning trades and losing trades. This was a short gain, a small gain in only a matter of 3 days. And I said the average holding period was anywhere between 2 and 5 days. That's average. This is a gain. We're going to focus first on winning trades and losing trades. What is the efficacy of the system? I'll put dollar amounts, I'll put gains in dollar amounts, returns on this in a little bit. But let's focus first on winning trades compared to losing trades. So that's a winning trade. Put a tally mark in the win column. The very next day, on July 24th of 2019, we have another RSI2 setup, don't we? Right? Price of the stock is still above the 200-day moving average, but it's still about to close below the 5-day moving average and the 2-period RSI below 10. If you didn't buy the stock the day before, you had an opportunity on July 24th. I'm not saying that if you did buy it the day before, you'd buy more of it the next day. What I'm showing you is every single setup, every single RSI2 opportunity moving forward from left to right from that first July 23rd, 2019 date. I'm not going to skip over setups. The point there is, and the reason why I'm doing that is I want you to see, no matter which RSI2 setup you take, because there can be consecutive ones, which no matter which one you take, what is the probability of a successful trade? What is your likely win percentage going to be? All right. So on that day, we had another opportunity to buy if we didn't buy the day before. So we buy it at 113.15, right near the close of that session. If we bought it that day, we'd still sell it 2 days later at 114.73. That's another winning trade. Now the next day is not a setup, is it? Even though price closed below the 5-day moving average, the 2-period RSI was not below 10 on that day. So that's not another setup. The very next one was on August 5th of 2019. Okay. Price of the stock above the 200-day moving average. We know that already from the long-term chart, but if the stock is experiencing a short-term correction where it falls below the 5-day moving average, closes below it, and the 2-period RSI is below 10. We enter the position at 113.08, give or take a few cents. That was the close in that day. We sell it 2 days later for $115.52, give or take a few cents, because the price of the stock closed above the 5-day moving average. That's another win, another winning trade. We had to wait another month. So what was that? That was August 5th of 2019. The very next one was September 10th of 2019. Price of the stock still above the 200-day moving average, but pulling back, experiencing a short-term correction where price has fallen below the 5-day moving average and the 2-period RSI below 10. If we buy it on that day, 119.88, we sell it 2 days later. That's a nice quick 2-day gain, $122.77. We see on that day price is going to close above the 5-day moving average, so we exit. That's another win. We had to wait almost another month for the next setup. I told you I'm not skipping over setups. I'm not just going to cherry pick dates. I'm just going from left to right chronologically. October 2nd of 2019, price of the stock is above the 200-day moving average, but has fallen below the 5-day moving average, closing below the 5-day, 2-period RSI below 10. So we take the trade at roughly 121.08. We sell it at $124. Price of the stock opened below, on that day, opened below the 5-day moving average, crossed above it, closed above it. We sell at 124. That's another winning trade. Okay. October 14th was the next one, the next setup. Price of the stock is still above the 200-day moving average, but has fallen below the 5-day moving average and the 2-period RSI just barely below 10. We didn't buy it the day before. We didn't buy it the day before that, nor did we buy it the day before that or the day before that, even though price closed below the 5-day moving average on all 5 of those days. Why weren't those RSI2 setups because the 2-period RSI was not below 10. You need both of those to be true. And they were true on October 14th, 2019. So we buy at 120.05. And here we sell at 119.08. All right, so this is a losing trade, right? If we buy it at 120.05, we sell it at 119.08, we lost. So put a tally mark in the L column. This is our first losing trade. So one of the slides earlier laid out the trading plan, and remember where it said exit criteria. It didn't say stop loss, right? It didn't say profit target. It's an exit criteria, meaning no matter what happens after you enter the trade, you are to exit the trade when price is about to close above the 5-day moving average. Most of the time, that results in a winning trade, and it has resulted in a winning trade up until this setup here, right? Because this one is a losing trade, so this is a loss. The very next day, though, is another RSI2 setup. So if you didn't take the trade the day before, you had an opportunity on that day. So 117.20 was the closing price on that day. And if we would have bought it on that day, we would have sold it at 119.08 for a winning trade. So put a tally mark in the win column. 2 days later, we have another setup. We didn't have one the day before, right? Even though price is below the 5-day moving average and closed below it, 2-period RSI was not below 10 on that day. So that's not a trade, not a setup. It was on October 17th. If we were to buy it at 116.63, we sold it again the same day when price closed above the 5-day moving average. 119.08, that's another winning trade. Okay, Chuck is asking, is this strategy for short-term trading? It sure is. It does not apply for buy and hold long-term covered call trading. It's strictly short-term. I am laying out the rules here, right? I am laying out the buy and sell rules. There's no way that you're going to hold on to a position and have it be referred to as a long-term investment using this system. It just can't happen because you are closing the position when price closes above the 5-day moving average. And remember, the average holding period is 2 to 5 days. Okay, so again, this is for your short-term swing trading portfolio. You're welcome, Chuck. All right, so how many winners and how many losers was that? Did anybody keep track? I'm gonna take a quick drink. Anybody keep track? How many winners and how many losers? All right, 7 winners, 1 loser. Pretty good winning percentage. That's 8 trades in a row. 8 setups in a row, 7 winners and 1 loser. Question is, instead of pricing at the day's close, why not do this at the open so you avoid an overnight gap leap? Well, you want the gap, right? I mean, if you enter near the close, boy, it'd be awesome if the stock gapped up. I know what you're saying, gap down maybe, but the reason for that is, and there is a caveat to this. So there's 2 different ways to trade this. Number 1, trade at the close. Number 2, trade at the open. The trade at the open approach, the next day's open, does not produce the same number of winners and the same returns that trading at the close does. Okay? But it is for those of you that say, you know what, I'm not comfortable buying on the close. I'm not comfortable buying on a down day. I want to wait for the next day's open. He does lay out that option for you. The returns aren't as good. Okay? Yes, so you can use this strategy for shorting as well. Okay, price less than the 200-day moving average, but above the 5-day moving average and the 2-period RSI above 90. Yes, you can. Okay, so that's 7 winners and 1 loser. That's pretty good. Now, I told you the reason that I went all the way back to 2018. I wanted to show you the system. I wanted to teach you the system. Procter & Gamble was as good a stock as any to do that. Remember, it meets those 3 different, it really meets the first one first and foremost. Price above the 200-day moving average. You want a stock in a long-term uptrend. I mean, that is a must. The short-term corrections are what you're going to play within that underlying uptrend. So all the way going back to November of 2018, all the way to current, there were 38 RSI2 setups total, 8 of which I showed you, right? 7 winners and 1 loser over that 8 sample size, those 8 setup sample size. But there were 30 more of them from November 18 all the way to current. There were 32 winning trades, and I found only 6 losing trades. That's an 84%. 84% winning trade percentage on that one stock. And I get it, Procter & Gamble, that was a cherry-picked stock. But don't focus so much on the fact that it was a cherry-picked stock, but focus on what type of stock is it. Okay, it's not a volatile $2 stock. It's a high comfort index stock. It's a stock whose price has to be in a long-term uptrend. It has to stay above the 200-day moving average. But from time to time falls below the 5-day moving average and the 2-period RSI below 10, all the while staying above the 200-day moving average. So that's the type of stock price environment that you want to stay in. So what I did, along with that one stock that produced 84% winners. Look, November of 2018 is how many years ago? We're going on 3 years ago, right? November is 4 months from now, so that's 2 years and 8 months of RSI2 setups, 38 of them. 32 winners, 6 losers, one stock, that's an 84% winning trade percentage. What I decided to do was I wanted to, as of a couple of days ago, July 6th of 2021, I went into the S&P 500 watch list within the VectorVest program. And I sorted that watch list by comfort index. Why comfort index? Comfort index is a proprietary VectorVest indicator that's scaled on a 0 to 2 basis. When it's above 1, that's good. Below 1, that's bad. And it reflects a stock's ability to withstand long or lengthy price declines. Top high CI stocks, I'm talking 1.9, 1.8, 1.7, 1.6, 1.6, 1.7, that in that range there. You're looking, when you look at a long-term chart, you're looking at bottom left to upper right, above the 200-day moving average the entire time. That's a top CI stock, bottom left to upper right. So that's this type of environment, right? That's the type of stock I want to favor when trading this system. The top 5 comfort index stocks out of all the stocks in the S&P 500 as of July 6th were LB, CZR, GNRC, SIVB, DFS. They actually might still be the top 5 CI stocks as of right now. Over the last 1 year, okay, across all 5 stocks, there were 65 RSI2 setups, not 65 each stock, 65 across all 5. So we're talking about 13 per stock on average. Okay, there were 52 winning trades, only 13 losing trades. That's an 80% winning trade percentage. Now, when you take a list of stocks, a rather large list of stocks, and you sort that list by a particular indicator, which I did, I sorted by CI, and when you take the top 5 and you research the top 5 and you test the top 5, that approach there, that methodology is not, quote, cherry picking. It's not cherry picking. It's using rank analysis to select stocks to trade. So this right here is not the same type of research that I did, like I did with Procter & Gamble, where it's just one stock. This is a much more systematic way to trade this system. Top 5 stocks in the S&P 500, top stocks in the S&P 500. That is the pond that you want to fish in. Okay. Now, what I've shown you up until this point is efficacy, meaning what is my hit rate? What is my likely hit rate? Meaning winning percentage, losing percentage. Well, we're looking at about, again, this is a small sample size, I guess you would say, but it's, it's the top 5 CI stocks over the last 1 year. You're looking at 80% winning trades. Now, what I want to show you next is a long-term portfolio that uses the same stock selection entry criteria that I just taught you. This portfolio here that goes all the way back to February 8th of 2010, bringing it up pretty much to current, uses the same RSI2 entry criteria that I just taught you. Now the difference here with this portfolio is the exit criteria. I had to change the exit criteria from what I just taught you because there's no way to automate it. There's no way to close my position when the price of the stock closes above the 5-day moving average. Unfortunately, within the VectorVest confines, there's no way to automate that. I know development is working on that, but just not available just yet. So I had to tweak the exit criteria a little bit, okay? From February 8th of 2010 to July 2nd of 2021, 616% total gain. That's a 54% annualized rate of return. It took $100,000 and turned it into $715,000 in about 11 and a half years. Over the course of 11 and a half years, there were 93% winning trades, 217 winning trades, 16 losing trades. That's a 93% winning trade percentage over the course of 11 and a half years. Okay? The overall market, so you're wondering, okay, well, how does 616% compare to what the overall market did during this same time period? The overall market went up 200%. The VVC tripled in value. Okay, we, needless to say, outperformed the market, the overall market, by quite a bit, with a 93% hit rate over the course of the last 11 years. Okay, you may be thinking, wow, this is great, but I don't have time, right? I don't have all this time to look at all these charts every day. If you're supposed to enter near the close with this system, enter and exit near the close with this system, you'd have to spend a lot of time to try to find a handful of candidates, right? Wrong. What I'm about to tell you eliminates all of that time. No matter what we teach you here, we want you to do it faster, smarter, and better. So I'm going to take a few guesses as to why you guys are here today. So you're tuned in today because you want to learn from the best. You heard and you saw that this webinar was called How to Trade Like the Pros. You probably figured that I was going to teach you something with regards to how professional traders trade. So that's why you're here. You want to learn from the best. This might be what's holding a lot of you folks back. You want to take emotion out of your trading. This is really, really crucial in kind of taking your game to that next level, is to not get down on yourself so often when you have a cluster of losing trades, or just having that visceral reaction when things don't go well. Okay, let's get rid of that. So that's maybe why you're here. You want to have more confidence. Confidence is a big part of trading. It's a big part of any profession, of course. I always compare it to the professional athlete. Baseball hitters is kind of the first thing that comes to my mind. When a baseball hitter, a good one, is in a slump, it affects their confidence. Right? Now, sometimes it's mechanics that is causing the slump. Other times it's a combination of both, mechanics and just confidence. They break out of that slump eventually. The good ones do, but we want to adopt kind of this idea of having more confidence and following the steps that I discussed here today. You'll get there. Okay, so maybe right now you're not where you want to be. The obvious question is, all right, this is interesting. This is something that you've been looking for, a systematic approach. Forget about, all right, I'll buy here, but when do I get out? And just trying to use different technical analysis indicators, throwing them all on a chart to get your answers. You do have a choice, though. You can take bits and pieces of what I taught you today, do it by yourself, or we can give you all the answers. Okay, that's why we put together this 6-session webcast series where we're going to teach you 3 of the techniques from 3 of the very best professional traders in the industry. You'll learn top trading techniques like the RSI2 and how to quickly and easily identify the best trades. I hope you saw that if you learn to implement strategies like the one I showed you today, you will achieve the success that you're looking for. Now this is Hugh. Hugh is a recent graduate. I wouldn't say recent anymore, actually. It's going back a little ways now. But he sent me an email after the course was over. He said, I'm a retired financial services executive So I had to unlearn what the quote street teaches to start making money. Before taking the Trade Like a Pro course, excuse me, I found it was difficult to stick with a system since there were too many variables. I never could achieve the short-term trading success I sought. I remember Hugh telling me that, look, he had no problems with his long-term buy and hold portfolios. It was the short-term portfolio that he was struggling with. He said, after taking the course, I began to see results right away. I now have a successful approach and I'm much more disciplined with my trading. So let's go over the agenda here. The modules, again, it's a 6-module course. The modules are pre-recorded, okay? They're located within the VectorVest University, and the first module gets you in the correct mindset to trade like a professional. We talk about risk management. Order entry is a big part of this first module, and then we'll get into some trading techniques. Module number 2 is bullish and bearish candlestick reversal patterns. There are ways to trade those reversal signals. What's your confirmation level, where your stop loss levels are for each of the patterns. So we're going to teach you all of the ins and outs of trading bullish and bearish candlestick reversal patterns. I love candlestick reversal signals. There are certain things though that you have to pay attention to. Not every candlestick reversal signal that might be formed the same way is a viable trade. There are certain other things that we'll focus on there. Module number 3, there are markets that trend. There are markets that move sideways, that channel. And there are also markets that hit an extremely oversold situation. In module number 3, we teach you how to recognize those different types of market environments and then which technical indicators to use in those different situations. Module 4, Steve Chappell, who is the other instructor, it's myself and Steve Chappell, will come in module 4 and teach you a technique called the Holy Grail for both bullish and bearish trades. This system was developed by Linda Bradford Rajke. Steve's going to come in module 4 and teach you this one. This is a very short-term system, but it has its own predetermined exit criteria, meaning where do you exit in terms of a stop loss and where do you look to take profits. It's already baked in there. Module number 5, I love the 50-50 strategy, one of my favorites. It's more of an intermediate term trading technique, meaning it's not as short term as the Holy Grail or the RSI2. It's a little bit more intermediate term where you may hold on to stocks for a few weeks, maybe a few months, just depending on if your stop criteria, which is baked in there as well, is hit or not. And then finally, module 6, the highlight, in my opinion, of this course is Larry Connor's RSI2 and another system that I'll teach you. I come in here in module 6 called the RSI 25 strategy. This is for ETFs only. So if you've been looking for a systematic technique to trade ETFs, both bullish and bearish ETFs, this is a really good one. All right. Again, all of these modules are pre-recorded. They're in the university. When you register, which I'll go over that in a moment, you'll have access to all of these right away. We're not going to release these. We don't release these once a week. So you have to wait 6 weeks to watch module 6. You can watch them all at once. As a special bonus, we're going to throw in this course. It's a 6-week, 6-session self-study course called Master the Art of Candlestick Analysis. This is valued at $995. This is going to be a special bonus for those of you that do register for the Trade Like a Pro course. Now, we teach a few bullish and bearish candlestick reversal signals in module 2 of Trade Like a Pro. We have a whole course on the topic. Okay. So this is a self-study course, no live mastery sessions. For that, Master the Art of Candlestick, it's complete self-study. Although once you go into the university, you'll have the Master the Art of Candlestick Analysis, you'll have the pre-recorded modules, and all of the other mastery sessions that we did a few months back. You'll have those. There just won't be any live sessions like there will be for the Trade Like a Pro upcoming course here. We will be doing 6 live mastery support sessions for Trade Like a Pro. Okay, this will be another bonus. These are designed to help you actually implement the things that you learned in the modules. We'll take a look at the things you're doing, questions you have. Steve and I will be giving you guys homework assignments after each module, and we'll go over the homework assignments in these mastery sessions. And these sessions, again, help you learn or help you implement what you learned in the module. For example, in module 4, Steve teaches you the Holy Grail, and in that module, he uses historical examples, okay, which is fine. In these live mastery sessions, though, we look at the market that day, and we look for real-time holy grail setups, real-time 50s-50 setups as of the current market. So you're applying what the technique, how the technique is supposed to be traded, what the chart's supposed to look like. You're seeing that historically so that you can apply that to the real market, and that's what we'll do during these live mastery sessions. All right. You'll also get 60 days access to our VectorVest real-time program, which is called VectorVest Premium. It's real-time data. You'll also have our pro trader searches and the auto timer, which are the tools that we'll use during the course. If you don't already have this, if you already have real-time and premium, you have it. You know how good the product is and how good the tools are, and you know, you were given that trial early on. This trial is given for those who don't have the premium package. Okay, well, they might have end of day, they might have intraday, but we want to give them an opportunity to try out all the bells and whistles, all the tools that we use for the course. This is another session, a bonus session. This is a live trading session. I love this session. This is where we go in. This is essentially module 7, where we go in and implement everything that we learned over the course of the 6 weeks. I'm going to show you how to use the RoboTrader tool to manage your trades. I'm going to step you through everything from market analysis, trade setup, trade execution, and then trade management. And this part is huge too. Exclusively for workshop attendees, you will receive pre-built searches that make finding your trades a breeze. You were probably thinking, all right, and I knew the questions had to be coming. They teach us all of these techniques, but how on earth will we find stocks to actually trade? Do we have to cherry pick all the time to find all these setups? You don't. The legwork has already been done for you. I built these scans to quickly and easily identify the best candidates to trade, and they'll be inserted into your VectorVest 7 programs. You don't have to build them yourselves. Okay? Another bonus, you're going to get this automated trading system with the subtle difference to the exit criteria. You're going to get all the variables. You know, with an automated system, there are more variables that are included in that trading system. There is, okay, how many stocks am I going to be holding? What market timing system am I going to use? Am I going to replace or not replace? What method of redeploying the funds am I going to deploy or adopt when buying a new stock? Do I diversify between industry and sector? All of those little variables within an automated trading system we're going to give you as part of the course. Remember, 616% gain, 54% annualized rate of return, 93% winning trades. And I'm going to throw in this one. This is a new trading system that uses the RSI 25 techniques on ETFs. Okay, it trades index ETFs, non-leveraged and leveraged, but it uses the RSI 25 trading rules that I will teach you in Module 6. This portfolio from November of 2017 all the way to current is up 78%. With 95% winning trades, 95% winning trades, 59 winners and 3 losing trades over this about 4-year period. The VVC up 47% over that same time period. Okay, you will get that trading system as well. Most importantly, you're going to get as close to hands-on training as possible. You know, with doing webinars. By both myself and Steve Chappell. Steve is the Director of Trading Systems Development. Steve and I will be manning the chat rooms in the mastery session, so you can ask us questions throughout the course. This course is valued at $29.95. The early bird rate is still available for $2,495, but what I want to do as a thank you guys for joining me here today, whether it's YouTube or GoToMeeting, I'm going to knock an extra $200 off. So if you register before the end of today's webinar, I'm going to stick around for a few more minutes after we're done here today, answer some of the more common questions that have come in. I'll give you guys a little hint too. The $22.95 rate will be available up until later on this evening. I have another webinar at 4:30. I'm going to give you guys a little bit of time here, but the $22.95 rate will revert back to the early bird rate of $24.95 later on this evening. I'm pretty sure Ray has already. Yep. in the chat box, guys, you will see that address that you see at the bottom, www.vectorvest.com/TLP. Click on the link that Ray put in that chat box. Okay, that'll bring you to the registration page. You'll see the $22.95 rate available. Now, if you are an elite subscriber, the rate is not $22.95. It's half off the regular price of $1497.50 if you are an elite subscriber. If you don't know if you're an elite subscriber or not, give our support department a call if you want to do that here quick and just ask. But actually, you'll know if you're an elite subscriber. Once you click on the link, it'll require you to log into the university. Your username and password will then get you into the university, either as an elite subscriber or a regular subscriber. So if, regular meaning you pay the $22.95. Okay, Jim, you can do the math there. I'm not sure. So we're looking at 93% winning trades. What I say, there was 217 winners. There's about 240 trades, 230 trades maybe over an 11-year period. Take out a calculator and do the math there. It's only maybe one or couple of trades a month. Okay, you're not trading. Let's see. I'll do it here with you guys. 24 months in a year times 11, 264 months divided by 240 trades. Talking about a one a month ish. One a month on average. Some trades are going to be longer. Okay, don't forget, this is a special bonus. You guys are going to be given this as well. It's 1 year access to Master the Art of Candlestick Analysis. By the way, the Trade Like a Pro course is 100% money back guaranteed. Okay, meaning if you watch all the modules, if you watch all the mastery sessions, if you do all the homework assignments, and at the very end you say, I don't want any of this. Take away my searches, take away the trading systems. I don't want the access to the course anymore. We'll give you your money back. It's a full 100% money back guarantee. Of course, we take all of those things away, but no questions asked. It is full 100% money back guarantee. Okay. Here are the dates for the live mastery sessions. We begin in a couple of weeks, July 28th, 2 weeks from tomorrow. We have our first live mastery support sessions, and all the mastery support sessions will begin at 2 p.m. Eastern Time. The live trading session will begin on September 8th at 8:30 a.m. Eastern Time. We begin an hour before the market opens because there is work that needs to be done before the market opens. There's market analysis. You got to determine, are you bullish on the market? Are you bearish on the market? You got to run the scans that we give you. We'll do that as a group together. You got to set up watch lists. You got to understand, all right, if you like this setup, where's my entry? Where's my confirmation level? Where's my stop loss level? Where do I look to take profits at a gain? All of this stuff is laid out prior to entry, okay, on the best candidates that we can find. Okay? Susan says, can the 3 criteria be used for day trading options? Susan, I can't speak on that either way. I have no idea. I've never day traded options before using any of this system, so any of these techniques. So hard to say definitively. So I'm not gonna say either way. Okay. All right. Jim says. Yes, Jim says, thank you very much. Not too taxing. Yeah, meaning not too many trades. It's not, using that automated system. Now, don't forget, the automated system is a little different than the system that I taught you earlier, where you exit when the price goes above the 5-day moving average. The stop criteria is different. You will get that as part of the course, only because, again, the exit criteria of price going above the 5-day moving average is not available. Just not available as an automated stop criteria. Okay, I want to thank Ray for being here. Ray did a great job answering a lot of your questions, so I really appreciate it, guys. Joe says, there are several systems here, like taking a drink from a fire hose. Do you have a less expensive course teaching us 1 or 2 successful systems? We have other swing trading courses, sure, but not another course where we just teach you one or two of these systems. No, we have a precision swing trading course, which we're doing right now, which teaches you reversal and continuation chart patterns. It's quite different than this one, but there are different swing trading courses that we offer. Now you're gonna complete this course, and you are gonna figure out for yourself which one or two of these techniques fits your investment temperament the best. Okay. Someone might look at the 50-50 strategy and say, you know what, it's too long term for me. And they may not use it. Some might say, you know what, I like the balance of the shorter term approach and then a longer term approach as well. So you're going to figure out which one of these is going to work best for you. Yes, thank you, Bali. Appreciate that. Yep. So I'm going to put that that was my first handout slide. Put the slides in the handout section request. So there it is. You should see it in a second. It should say TLP slides. It's just a copy. It's a PDF of the slides that I used here today. Okay. All right, guys, any questions here? So Joe says, I would just be interested in Module 6 because it seems to have the best and safest returns. Okay. Joe thinks that going in, so that might be what, you know, the couple of strategies there that might work best for you. I think the 50-50 you'll like as well. I like them all, honestly. You know, including the candlestick reversal patterns for sure in Module 2. All right, guys, don't forget www.vectorvest.com/TLP. By the way, if you've registered already or are planning on registering, just type in I'm in the chat box. I'm in. I kind of like to put a name to a student so that when we start in a couple of weeks, you know, I'll recall those of you that did that. So just type in I'm in the chat box. We'll get familiar with each other. Any other questions, guys, before I wrap up here today? Don't forget that $22.95 rate will only be available until later on this evening. Okay, otherwise it's going to revert back to the $24.95 rate. All right, guys. Enjoy the rest of your day. It is Tuesday, so we got 3 more trading sessions left. What's the market doing today? Still down? Yeah, everything's in the red today, man. BBC's down 0.75%, almost 50 cents today, while the other indices are only down about 1/4. So tough day for the market today. All right, guys, have a great rest of your day. We'll see everybody again soon. Take care, folks.